All right, gang. Happy Wednesday to you. Welcome back to the live trading room. Got a little bit of a different session today. We're going to be short. My wife is extremely sick. It's my youngest one's first day of preschool, so I've got to go drive him. So we're probably going to run about an hour, maybe a little bit less. She's just unfortunately unable to. Yeah, she's not doing well. So but of course, you know me, I didn't want to miss 2 days in a row or 3 days. Well, Monday doesn't count because of the holiday. I didn't want to miss 3 days in a row. So I did want to come in and give you guys some stuff, but we're going to make it kind of quick. And if need be, I may have to head out early because I don't even know if she's going to get the oldest one to the bus stop. But Cody says, first day of my daughter today as well. Yeah. She gets sick like once every like 20 years. And it just happens to be today. But let's take a look at some markets. Yeah, unfortunate for Everton. Played well, though. They're playing well. Very optimistic about them. Had a chance to go to the U.S. Open on Monday as well, which is pretty cool. My kid got to play on the courts. Then we got to watch some matches and buy some expensive food, $15 hamburgers. Tasty. So a pretty good weekend. So we're going to start here with the Aussie dollar. I think the Aussie dollar is a really good one to look at because it kind of follows up. Yeah, Cody, it was funny. I'm a man of my principles. I'm very frugal, and I had this headache because I woke up 2:30 in the morning. We had to leave here 4 o'clock in the morning to get up there. So midday, I got this headache, my non-coffee headache, and I'm looking at this coffee, and it's like $9. And like I want it, I need it because I'm addicted. I'm itching, I'm scratching. I know it's going to cure my headache. But just a man standing on his principles, I refuse to pay $9 for a cup of coffee. Refuse. I refuse. The hamburger was a little bit different because I had to feed the kid. The law says so, so whatever. But I refuse. So I muscled it out and got some gas station coffee like 7 o'clock at night. But there's a limit. There's a limit. But Aussie dollar is an interesting one to talk about because I just did I reviewed a trader's trading plan, one of our traders here, Jacob, over the weekend. And he was looking at a counter trend strategy, and I found a few holes in it, or not holes, but things that I think need to be tightened up a little bit. And I think this works as a perfect example. So Jacob is looking for counter trend structure based trades, and I'll kind of walk you through his game plan. Um, so the first thing he looks for is a previous level of structure. Now, I'm not sure how he's identifying levels of structure. I'm not sure if he's using the VS1 levels or just eyeballing it. But you guys know that I specifically like this zone, right? I like measuring off the zone between the lowest low and the lowest close. Ideally, right? I like for the market to kind of probe that zone, but that's not always going to be the case. And Jake's entry reason is going to be a higher high, higher close. Real quick, Fabio says, hey, Akil, by the way, this was nice. Oh, man, dude, the predictions from this weekend's Trading Edge video, man, bang, 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 on point. Dollar Canada, boom, on point. It's been a very good start of the week. I usually don't toot my own horn, but I've been on point this week. I'm excited. My bank account's excited too. Real quick, Fabio says, hey, Akil, dollar yen was crazy these last 2 days. I had some predictions, same prediction as you, 145 after the break, but I never had a valid pullback for me to get in. There were only breakout patterns. Yep. Yen booming. Now there's the talk again of the intervention between the Bank of Japan, right? They're upset about the quote one-sided direction in the market, and they're threatening once again they may have to intervene. Now, again, they've done this before. They have intervened before. Intervening on the buy side is a little bit harder than on the sell side. So I think a lot of these threats are threats to kind of scare the market. This is what we talk about, like the manipulation and whatnot. Threats to kind of scare the market where everyone hears, oh my gosh, Bank of Japan intervention, let's sell the yen or let's buy the yen because blah, 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 blah. I think they're trying to bluff a little bit there before they actually do something. But that's for another story. Can't stop this strong dollar, weak yen train. By the way, I'm all over the place, but this is also our week of monetary policy. So we had RBA, we have Bank of Canada today, we've got the ECB tomorrow. So boom, 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 back to back to back. Then Fed Chair Powell on Thursday. But going back to the trading opportunity here. So we're at structure. You can see we came down. I'm here on the 4 hour. We tested structure and we threw in a nice little 3-bar reversal. Now Jacob's trading plan only requires a higher high, higher close, or a lower low, lower close entry. But you can see a very strong bearish move down, right? A very strong bearish move down. And then what do we get at the very bottom of this downward move? What do you guys see? By the way, I got a cool day trading video I'm going to upload for you guys, hopefully later today as well. A nice little day trade on pound dollar yesterday. And by nice little, I mean like a 9-hour day trade. Ugh. Yeah, we see an indecision candle, right? We see price action test our level of structure. This box is our zone, and we get some indecision. Now, again, indecision is a handful of, it could be two things, right? It could be previous sellers from up here, probably taking some profits. It could be new buying interest as well at that level. It could be a combination of both. But we get that indecision, and then we get a higher high, higher close, which is a positive sign for the bulls. So this is a nice buying opportunity right here at market, right? If you buy next bar market, and this is what Jacob's plan does, right? Where can we look for targets at? What do you think is a solid level? Previous level of structure right inside here. I think that's a good level, right? Nice conservative level to go for. Now, here was one of the concerns I had with his trading plan, was his stop loss. And if I remember correctly, man, I may have to reread this. I'm not sure if it was a 5 pip stop loss. I'm not sure if it was 5 pip below the low or 5 pips below the entry. I would assume it's 5 pips below the low. But here's the question that we want to ask, right? So we have our low right here. Let's assume it's 5 pips below the low. This is 66.99. So 66.94 is going to be our stop loss, right? Right here. What do you guys think about that stop? Obviously, it gives us a good risk reward. That is part of the plan. We want that. But what else stands out about that stop loss? And what is the main question we want to answer? By the way, Cody, I got to speak to Emily Beer's parents the other day. We had our alumni meet. So I got to see them at one of our meets. First time I met her parents. They had some very nice words about you and your family. I was all excited. I'm like, I know that guy. You guys always brag about knowing me. I got to brag about knowing Cody the other day. I'm like, I know him. But that was pretty cool. Nice girl. Great family. Yeah. Is this a safe stop loss? And we got it on YouTube as well, not below structure. And, we also had this conversation with a breakout trader last week about, is the stop loss too close? Is it safe enough? And ultimately, that is a question that is going to be up to you and the trader, right? Because you as a trader, because you have to judge your risk appetite. You have to judge what levels you find important, what levels you don't find important. And no one can tell you otherwise, right? That is completely up to you. But, and really theories on stop loss is going to be completely up to you as well. Now, my theories on stop loss is this. This is my theory of a stop loss, right? My stop loss needs to be at a level or a place, a price point, whatever you want to call it. My stop loss needs to be at a price point that tells me I'm wrong, right? That's where my stop loss needs to be. And feel free to chime in if you have the same or different kind of philosophy on stop. My stop loss is at a place where the market says, hey, Akil, you predicted this. I'm telling you that you're wrong. You should probably get out, right? Because understand, trading is, when we enter a trade, we're asking a question where not is the market going to go up from this level, right? Because we can always say the market is going to go up or down at any point, right? It can always come back to it, right? That's the whole thing about, I don't know, you guys ever heard about gap trading over the weekend? Right? I forgot the number, but there's these weird numbers where it's like, let's make something up. We're like, well, 70% of the time gaps fill, right? So here's a gap right here. 70% of the time gaps fill. Now let me ask you this. Is that a does that saying actually mean anything? If I tell you, hey Dan, 70% of the time gaps fill, does that actually mean anything to your trading? Or is something missing? What do you guys think? Is that information that we can use? Should I just start trading gaps because, hey, 70% of the time I'm going to win every time? Well, there's something missing because what does 70% of the time gaps fill mean, right? Does it fill right away? Does it fill a month later? Does it fill 2 years later, right? How are we actually calculating these stats, right? If a gap opens up here, right? If we open up, this is a gap, right? Boom, boom, boom. If we open right here and then we go down 3,000 pips and then move back up a month later, does that count as a gap fill? Well, based on, hold on real quick. Come on down, buddy. Cam, come down. Right? Well, technically it can count as a gap fill, but in real life, would that be a winning trade? No, right? So the question that we're asking ourselves when we're trading is not will something happen, right? It's will A happen before B happen. So when we think about our risk reward and a trade placement, we're saying that we're predicting price is likely to go here before it goes to our stop loss, wherever that may be. In this case, right here. That's the question we're asking ourselves. So when I place a stop loss, I want to place a stop loss at a level that's going to tell me I'm wrong. Because if I'm wrong, I want to be out of the trade. I don't want to waste time. Now, within that wrong level, I do want to give a little bit of breathing room, right? I don't want to be if I don't want to be like 1 pip below the level because I know how markets spike and wicks happen and all that stuff. And I also don't want to be 80 pips below that level because I don't want to give up. If I'm wrong, I don't want to give up too much to know that I'm wrong. So it's about finding that sweet spot, right? So a stop loss like this, however, and again, this is not my plan, this is not my philosophy, but a stop loss like this wouldn't be that helpful for me because it doesn't necessarily tell me that I'm wrong. In this specific scenario, right? What I'm saying, if I were taking this trade, is that I think price action is likely to go here before it violates this structure because this is an important level for me. A violation of this structure tells me that I'm wrong. So for me, my stop loss needs to be below there, not below here, or not right up here. So again, not saying that this is a bad stop loss. Everyone is different. It all depends on your philosophy and your theories about the market. But that's personally how I like my stop loss. So I was, I told the trader, I think, a 5 pip stop loss can get you into trouble because it may be a little bit too tight in certain scenarios. What is another problem with a stop loss rule that says 5 pips below the low? What are some other issues that you may run into and why you guys are answering that? I'm going to run through some of the questions that came up. I'll start with the tier 1 platform. I'll go over to YouTube next and TradingView. Daniel says, does that theory not depend on the strategy itself that you are trading? For example, if you base your stop loss placement on structure, different ATR in fibs. Yeah. So yeah, it all depends. So it depends on what is important to you. So for me, it's going to be this level of structure. If you have a specific Fibonacci level that is important, let's say a 618 Fibonacci, yeah, then if that 618 Fibonacci or 1618 Fibonacci, whatever you're using, if that is the key level that you expect to hold, if that is a level that if broken, right, then your theory is wrong. Now that Fibonacci level becomes the important factor that you want to get beyond, right? Does that make sense? So if I'm saying it wouldn't work in this scenario, let's say I'm using, let's say I'm looking at a pullback trade, for example, and we're looking from here to here. And let's say price action. Matter of fact, here's a good example. So I used to trade something called the Fibonacci failure. So Fibonacci failure, this wouldn't be one, but the example is we'd look for a pullback to a 3D2, right? And then an extension down, right? So a very strong trend, right? Shallow pullback, strong trend. In the Fibonacci failure pattern, the 618 was the completion point, right? Or the invalidation point. So if this trade was correct, price action should not, right? Price action should not go beyond the 618. So the rule for stop loss in this trading method was we'd put it 10 pips above the 618 because the 618 was that most important part. Didn't matter about structure looking left, didn't matter about whatever. It was beyond that 618 because that 618 was kind of the determining factor. So yeah, in this case, we're talking about structure because it's a structure-based trade. And for the trader who we're talking about, his method is based off structure, but it can certainly be a Fibonacci. It can certainly be a even handle number. It could be, whatever you value in your trading. Very good question, Daniel. Yeah, so it's whatever. Yeah, and the main point is like you have to have something you value, and I think as traders we need to know that in general in our trading philosophy, but also in our strategy, right? So when we enter a trade in our strategy, whether it's a breakout trade, a pullback trade, a counter trend trade, what are we valuing? What is important to us? Is it a level of structure? Is it a Fibonacci? Is it a specific candlestick? I think it was you, Daniel, we talked about last week in your breakout, right? That's a different type of trade. In a breakout, strong breakout should break out aggressively and never look back. So you can have a shorter stop loss because your whole theory is, hey, if this is right, we should not look back at all. So maybe the breakout candle is the candle that is important to you, right? It all depends on what we find important, what we value in the specific trade reason. And again, this goes back to traders in general. I don't think most traders pay attention to this type of stuff. Most traders just say, what's the signal? They don't actually have a value in their strategy or their system. They just found something on the internet and they're going with it, but they don't understand the inner workings of it. You have to know what's important. You have to know what's important. That way you can shift your strategy and mold your strategy around what's important. And what's important to you could be different to someone else, like we mentioned earlier. But if you don't know what's important, right, you're going to have a lot of trouble being consistent in trading. Real quick on YouTube, want to go back. It's a riskier stop. You can always re-entry if you are allowed. Yep, we can talk about that in a little bit if you get stopped out. And that's another question I had for the trader. I said, well, if you do get stopped out, is there a plan for re-entry? Are you allowed to? If so, how? Do you want to re-enter? That's another question as well. It's very hard to take similar trades in the same location, especially after taking a loss. It's imagine like you going into the ring with Mike Tyson. Mike Tyson punches you in the face, you get knocked down, and then you get back up and you got to do it again. If you're anything like me, you want to run away and hide, but you got to do it again. It's tough. Fabio says, my double tops and bottoms have a stop dependent on the extreme of the formation, and I am okay re-entering if it forms another valid one. Stops go 1 ATR below the extreme. Thank you. Dale says, right, exactly, but I trust my testing results more than a random pip count. Yeah, and again, yeah, random. You never want to have anything random. There should always be a reason for everything you do. Nothing should be random. And if your testing says, hey, if you test 5 pips and your testing says, hey, 5 pips is that number, then boom. So another thing with the 5 pips, right? Going back to my issue with kind of just what could be a random number is we need to understand that 5 pips is going to be different depending on what pair we're looking at, depending on what time frame we're looking at, right? I spoke to another trader the other day, not one of ours, right? You can tell it wasn't one of ours because he was talking about trading on the minute chart. He said, Keel, what higher time frame would you use for trading on the minute chart? And I had trouble asking that. In my head, I couldn't comprehend being on the minute chart. I'm like, I don't know, it doesn't matter. But a 5 pip stop loss on a minute chart, that's a pretty significant stop loss, right? Probably. I don't even know what the ATR is on the minute chart. I don't venture down those ways. But I can imagine a 5 pip stop loss is probably a significant stop loss on the minute chart. Is a 5 pip stop loss on a 4 hour? Is that a big stop loss? No. What about a five pip stop loss on like what's a slow pair? Aussie Canada. Probably okay. If you, let's say, like an hourly chart or a 15 chart, is that the same as a 5 pip stop loss on the pound yen? Right? So there's differences across the board as well, depending on what you're trading. Right? The pound yen is a much more aggressive pair. The ATR is probably what, 2 times the size of Aussie dollar. So a 5 pip stop loss on a 15-minute Aussie dollar, maybe that gives you enough room. It's not going to be the same on the pound yen. So I think you got to be careful with that as well. It's having that random number across all pairs. I think you need to do something that's a little bit more dynamic to the specifics of the trading situation. Should there be flexibility within the strategy in the stop and targets, the 5 to 10 pips, 1 to 2 ATR? There doesn't have to be. I'm always a fan of having flexibility because it allows you to take into account other things. So, for example, if you had a stop loss rule that says 5 to 10 pips, and you see there's an even handle number in the middle of there or a level of structure, it does allow you the flexibility to adjust it to take into account those other things. I'm a massive fan of doing that. You guys know I do that in my personal trading. And I got the question: is this a sell or a buy? Man, you are asking the wrong questions. Are you ignoring all of these lessons on the stuff that really matters about trading to ask me if this is a sell or a buy? Is that really happening right now? Right? The 20 minutes, the 20 minutes of education on the stuff that matters. We're talking about the stuff that really matters in trading. Stop loss placement. So many traders are bad about stop loss. We're giving hints and tips and advice on what you should be doing, what to pay attention to, some adjustments you may need to make in order to better yourself as a trader. And you're asking me if this is a sell or a buy. Maybe I'm being harsh. Maybe you came in late. Maybe I'm programmed because I get this a lot on the internet, but we're focused on the wrong things here. But to answer your question, it would be a buy. This is a structure-based trade. Playing at a previous level of structure support. The trader who we're talking about, this is a buying opportunity. He's looking for a retest of structure, a higher high, higher close. So this would be a buying opportunity. It was a selling opportunity last week from our descending triangle, head and shoulders. And if we violate this previous level of structure, it will be another selling opportunity. So maybe I'm being harsh. I need to be better. I should be nicer. Some of you guys are probably saying I'm too nice. But like that really bothers me. Is this a sell or buy? Because that's not a good question. It's not a good, even if it had the right intentions, it's not a good question. It makes it seem like you're chasing the signal. It makes it seem like your hand is hovering over, and I shouldn't assume, but that's just from previous experiences. That's what it is. It seems like someone is just looking to take a trade. And again, once again, we need to focus on things that really matter in trading, in my opinion. But I got you. Yes, you're saying yes. I am programmed. Yeah, yeah. I should not assume. I should not assume. But I'll leave it at that. But there could be better ways to phrase the question so that it doesn't seem like you're looking for a signal. There are better ways to phrase it, so we can both become better on both of our sides. Because we shouldn't assume. I shouldn't assume. I got to get better at that. But you guys know what it's like out there. You guys have seen it. I'm just coming back to Forex, hoping to get the best out of it. Don't hope. Put in the work and make it happen. We don't need hope. We need hard work. We don't need hard work. Yep, this is what I do for a living. What, 16 years in running now? Is it that long already? 16 years. Yeesh. Hoof. Humph. Getting old. Fighting off these grays. All right. Real quick on a lower time frame, I agree with you. And if it breaks the support, this is definitely a downtrend. Yeah, it's all about decision points in the market. So our key levels of structure are going to be our decision points, and our philosophy. If you guys are familiar for IPDE, identify, predict, decide, execute. It's all based around decision points. And where is the market at? What is the market likely to do if blank happens at one of these decision points? And a real easy way to do it is when you see key levels of structure. If we hold, that could be a counter trend trading opportunity. If we break and close below, that's a violation. That could be a continuation opportunity. So honestly, what we're looking for in the market is we're looking for a price to get to these decision points. If we're looking for a trade, we're looking to see the reaction at these decision points, and then we're looking to plan our attack and get involved. But we're going to shut down the live stream in a little bit. Again, if you guys are just coming in, quick day. I got to take my kid to preschool. The wife is deathly sick. Not deathly sick, I shouldn't say that, but she's curled over right now, which is not really good. But any other questions about this trading opportunity before we shut the live stream down? For you guys watching on TradingView and YouTube, thank you. Great comments and questions today from you guys. We'll be back tomorrow, same time, same place. Of course, live rumors, we're going to keep going for a little bit longer. Secondary entries. We had a question about that. Yeah. So secondary entries. So I talked to traders, said, hey, if you're going to use a tight stop loss, there's going to be the higher risk of you being stopped out. You need to have a way, an option for secondary entries. By the way, if you guys are coming in, I got a cool day trading video coming out later on YouTube today as well, from yesterday. Hopefully I have time to upload it. So yeah, a secondary opportunity could be a double bottom, right? If you get stopped out, or someone looking for a more conservative entry, a double bottom. So let's say you needed your stop loss to be below structure originally. You couldn't get the risk reward to work in your favor. Okay, well, boom, scratch that. Plan A is out. Let's go to plan B. If I get a double bottom, and we know our rules for a double bottom, obviously we don't know where it's going to complete yet, but let's say we complete right here. Boom, now you've got a risk reward that's in your favor, a secondary opportunity to get involved. So I think you need to have that as well. That's one thing I learned over my years of trading is the market is rarely going to give you everything you need, right? And you guys that have been trading for a while, you guys notice the bulk of your analysis and predictions never happen, where you're waiting for a price to hit a certain level and it goes the other way, or your price does that hit that certain level and you're waiting for your entry reason and it never happens. Have multiple ways to get in. Have your A way, have your B way, have your C way. Typically after C, then you got to let it go after that. But you can easily do higher high, higher close as your entry, your first strike entry, double bottom as your second strike entry. What will be a third strike entry, guys? Give me some ideas. Yep, 2618 as a third strike entry. Yep. Boom. After that, then it's just not meant to be. But at least you had 3 opportunities at getting involved. So good stuff there. Let me just finish running through these comments and then we'll move on. Live rumors, let me know where you guys want to head to next. Again, short time today, so if it's something you really want to take a look at, I'd rather get to it right away. Quit my job, and this is all I'm doing now. Nice. Sounds like that was what I did. I quit 3 jobs to take trading seriously. It wasn't the greatest decision in the world, but it was what I needed to put myself in a position to be successful. I would just tell you this: in my mind, success was gonna come a lot quicker and a lot easier than it actually did. So just keep that in mind. Keep that in mind that trading is a journey, right? We know this. We've talked about the timeline many times. It is a journey. Don't expect instant success, but it is something that anyone could be good at. So there's no excuses not to be good. You don't do any type of genetic lottery. It's all about hard work, effort, and are you willing to do what needs to be done to be successful? Real quick, looking at this downtrend, there seems to be divergence in the RSI. Yep, we got divergence coming into this potential double bottom right here. We can go back to the 4-hour real quick. Not a lot of divergence here on the 4-hour, but definitely divergence coming into that double bottom there on the RSI. Now, again, the main question is, what does that divergence mean for you? That's the big question. All right, lastly, some YouTube questions. Akil, I need your help, please. When I'm doing my direction and I squeeze my chart, I don't know if I'm a trend. You got to go back to the basics. We've taught you how to identify a trend. We have taught you how to identify a trend, right? There is a video on YouTube telling you how to identify a trend, right? Watch that. It should be the trailer on my YouTube channel. Watch that. But here's the thing, and I'm talking to you guys on the in the live room. Is it as simple as just watching a video and learning how to identify a trend? No, because if that's the case, everyone would know how to do it. Why? Because there's a free video on YouTube of me showing you how to do it. What do we have to do if we want to get good on it? Good at it. Good at anything. It's not just identifying a trend, but in general, what do we have to do? Can we just watch a video and be successful? Ooh, I watched 30 minutes of Akil training videos. I'm a great trader now. No, you got to practice. Repetition, you got to practice. You have to watch that video. And we know the hierarchy of learning and retention. We have to watch that video, and you got to actively go into the charts and practice it. And then you got to ask questions. Right? That's one of the beauties of having a community, where the ones that are really serious, you'll see them type in questions on the chat and be like, hey guys, is this a downtrend? Let me know. And then you'll get feedback, and then you readjust, you learn, you do it again, you put it out there to myself, to our traders, you get feedback, you learn, and you keep doing that until you get better. That is like having a coach, right? A coach is there watching you kick the ball, swing the ball, dribble the ball, whatever you do. A coach or an accountability partner, whoever you want to do, or both, where you do something, you work on a skill, you get feedback, you take that feedback, you put that feedback into work, you work again, you get more feedback, and you rinse and repeat until you're great. But you can't just watch a video. You can't just watch a video. You got to practice it. And it's got to be purposeful practice, right? Spending time on a chart is not just practicing. You have to be doing the right things, or you're never going to get it. And it's not easy. The principles are easy. New structure high, outside return, new structure high. That's very easy. But in real life, hard. The markets don't make it simple for you. But you got to practice. And you will get better. Reps. Every trader in this room has put in reps. And you can see the difference between day 1 and day 90. And even then, there'll be setbacks. But you got to put in the reps. So revisit those principles, write them down, draw them out, and then start putting in reps in the market. And just remember that the market provides a lot of noise. We'll do this last thing before I get you guys out of here. The market provides a lot of noise. Most of the noise that the market gives is completely pointless. I would say 90% of the market action is pointless. Our job is to identify the 10% that really makes a difference, and not be distracted by the other fluff that's happening out there. Because the market gives you all this stuff to confuse you and kind of get you distracted, while the thing that really matters happens. And the thing that really matters, that's the thing you make profit off of. So good question. Shutting down the live stream. I'll see you guys tomorrow. Thanks for joining. Great input today. I need this energy every day. Don't forget to hit that like button on your way out. Keep an eye on the YouTube channel for a little day trading walkthrough video as well a little bit later today. Hopefully, if I have time, we'll see. Live rumors, let me know.